Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another special episode of Equity Mates, where we are searching for Australia's next top trader. We're a podcast that breaks down the world of investing from beginning to dividends so that you can hopefully make some returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going, bro?
I'm good, Bryce. How are you?
Good. I've just realised again that if people have just started listening and joined the show because of the competition, I don't think we've ever made reference that your real name is actually Alec. So for everyone out there,
surprise.
Ren's real name is Alec. I call him Ren for reasons unknown.
And Bryce's real name is actually Bruce, but he just doesn't like the ring of it, so we call him Bryce.
That is not true. Let's pick up where we left off in our last episode, Ren, and that is pardon the jargon. We're going through a number of key terms that you're likely to come across during the competition and more broadly in your investing endeavor. And we did understanding the market yesterday, some of the key terms that you will come across when you're looking at the market more broadly. And today we're going to go a level deeper and look at some of the key trading terms that you might come across in your competition and journey of investing. So let's get stuck in.
Yeah, all right. Well, the most common ones that you'll hear are stock and ETF. And now we did a whole episode on them earlier in this series, so we won't go over it again. But in a nutshell, they are the things that you can buy in the stock market through stake. So you can buy a stock, which is a share of a company, or you can buy an ETF, which is an exchange-traded fund.
Nice. What else have we got, Ren? We've got index that you're very much likely to come across when you're looking at ETFs and stocks. And you'll hear the NASDAQ index, you'll hear the S&P 500 index. So what are we talking about? What's an index?
So I'm going to try and keep this straightforward. Tell me if I don't.
Okay.
Essentially, an index measures change over time. What it does in an investing context is it will get a basket of stocks. So, for example, we use the S&P 500 commonly, which is the 500 biggest companies in America. So it gets a basket of those 500 stocks and it baselines them at whenever, and then it measures the change of that basket of stocks over time. And so as those companies get more valuable, the index goes up. And as an investor, you can invest in the index of those companies. So as the 500 companies get more valuable, the index moves up and you make money. And then what ETFs do is they give you a really easy way to invest in that index. Hopefully that's not too confusing, but just think of an index simply as measuring change over time, in investing context, change in price over time, and then have a look at whatever the index is tracking. So it might be tracking gold, it might be tracking oil, it might be tracking a bunch of companies, it might be tracking a particular sector. You know, it might be tracking the food and grocery sector, or it might be tracking the mining sector. The indexes are just a really easy way to measure that change over time.
Yeah, nice. That's exactly it. I didn't get lost. I hope no one else did, Ren. I think you did a good job on that one.
Thanks, mate. Well, let's see if you can do a good job with stop losses.
Okay. You backing me in?
Always, mate, always.
So stop loss is a type of order that you can do through stake to do with selling your shares. And as we mentioned in our six-week tips, one of the things I mentioned, Ren, was selling out of your stocks that are going down as an option. Obviously don't have to do it, but something that I would personally probably do in a 6-week period is sell stocks that are losing money quickly so that I could put that money into something else. Now, a stop loss is an order to, it's a buy or sell once a stock reaches a certain price. So a stop loss is designed to essentially limit your loss on your position. And what you can do is set a price that you want the stock to sell if it starts going down, so that if it goes into free fall, the stop loss will kick in and limit your losses. It's an advanced type of order. Usually when you go to sell a stock, you can just sell it at market price and it'll find a buyer and seller and sell it at that agreed price. But otherwise, you can put in a stop loss to limit your losses. So for example, I buy Amazon at $10. I don't want to lose more than, say, 20% on that. So I'm going to say I want the stock to sell at $8. And then once the stock goes down, if it hits the $8 mark, it will sell at that $8 mark and I will come out with a 20% loss. If it continues to fall and I hadn't had the stop loss in there, then I could have lost even more money on it. Did I do well there, Ren?
You did, mate. You did. That was good. I think people definitely got it. And if they want to apply a stop loss, they can do that through Stake.
It's in your advanced orders when you go into the sell section. Certainly something to try and get your head around, and we do discuss it in detail in a later episode. So that's a stop loss, and you will come across that in your trading terms.
Now, one other set of terminology that you might hear or that you might come across when you're buying and selling shares is a bid and an ask price. When you go to buy something on the Stake app or the Stake platform, you'll see it will tell you what the ask price is. Very simply, the ask price is what sellers are asking for. So they have gone to the market and said they're willing to sell their shares for whatever their asking price is. And then the bid price is what buyers are willing to bid for that stock. So they've gone to the market and said, we're willing to pay this for a share. And when a bid and an ask match, that order will be matched and then the shares will be traded. So just think of it as a way of matching buyers and sellers in the market. When you're putting your order in, you can set a price if you want to. You can, if you want to do an advanced order, or you can just buy at whatever the matching of the bid and ask price is. You can just say invest, $1,000 at whatever the price is at that moment, and that's known as the market price.
Nice, Ren. Another one. Did well. Yeah.
So I think that hopefully that's the key terminology that you need to understand to trade. I'm just having a quick flick through the Stake platform to see if there's anything else that might come up, but I think really that's about it. If you get confused about how to buy and sell or anything around market jargon, you can jump on our website equitymates.com/glossary, or you can just hit us up and ask the question of us directly. contact@equitymates.com. We're here to help. We want people to get the most out of this trading competition, and if you don't make any money, but you understand the market better and you can sift through some of that jargon, we'll take that as a win because hopefully it sets you up for success down the road.
Absolutely. In terms of orders as well, all the different types of orders that you can do on Stake from market order through to advanced, we will do an episode on that you can tune into as well to know everything about how to place orders on the platform and how you can use orders to, I guess, be advantageous in the game. So, Ren, we will continue Parking Jargon next episode where we will be going into some of the key terms that you will come across when you're looking at a particular company.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.